morning, ladies and gentlemen. A very warm welcome to you back on Business Today Television. The markets seem to be shrugging off the insipid trade that we've seen over the last 4 or 5 trading sessions. Nifty back above 25,000, 214 points higher. The Bank Nifty 467 points higher. 56,046. Last trading day of the week, which has been characterized by low volumes and, of course, a downtick in everything as far as equities is concerned, but commodities are in top shape. We've seen a lot of momentum coming into, of course, crude oil, as also the record highs in the recent past in silver and gold, plus metals such as copper, aluminium doing pretty well in the markets. To throw some better light on the commodity space, we are now joined by Mr. Kunal Shah, Head of Commodity Research at Nirmal Bank Securities. Kunal is a veteran of the commodity space for the last 20-25 years. He's been tracking and investing in all these commodities locally as well as globally. Namaste to you, Kunalji, and a very warm welcome. The only bulls that are there in any asset class is commodities. You should be having a great time these days. Silver at a record high, gold almost near there, and what to talk of crude oil. So you are the happiest guy on Dalal Street these days.
Yeah, commodities and asset class is having a great time, and we are tracking, like you rightly pointed, and thanks very much for your kind words. So we've been tracking this complex from last more than 20 years, and it's a really great time to be in right now in commodities.
Okay, wonderful. Now let's look at the Indian basket and look at the metal space. Kunal, silver is in top form, and we've seen a record high well above 1 lakh 7,000, 1 lakh 8,000 rupees a kilo all of last week. What is your medium term outlook on this precious metal? Is silver going to be the new gold? That is what a lot of guys are talking about in the commodities space.
Yes, it is. So when you look at the demand and supply of silver, this is the only commodity which is running in a structural deficit from the last 3 years, and the deficit is as high as 8%. So there is a 8% gap between the total demand and supply. Supply is less as compared to the demand by 8%. It's a very big thing in a commodity market, and this is running from last 4 years. So now when we are getting stronger and stronger, and the supply side is responding, because most of the silver production comes from the secondary mine, 50% consolidation and a major downturn. So silver production is not responding to the higher prices, and hence we are of the view that silver prices are to a much higher level. It has already moved up by 20,000 rupees in a span of last 25 days. But going forward, we expect this to continue. Any peace talks between Israel, Iran, or anything positive happening, there can be a correction of 2-3,000 rupees, 2-3%. 1 lakh 2,000, 1 lakh 1,000, again great level to start investing in silver. By the end of the year, you can see silver somewhere at 1 lakh 20,000, 1 lakh 21,000. That are our conservative estimates. So we are very bullish on the metal.
Okay, Kunal, because you are a trader of great repute, for your own clients, are you getting them into silver ETFs? Are you asking them to roll over silver futures, or does buying physical silver make more sense?
So we have been recommending to go long in silver ETFs. So we recommend our clients to go long in silver ETF. Whoever wants to roll over their positions in derivative, M6 is the best choice. But I will not recommend to buy silver in physical, because it becomes very difficult when it comes to storage. So if you have a very small quantity to buy, then buying physical makes sense. Otherwise, buying physical doesn't make sense. Holding silver is definitely going to be a very challenging task as compared to gold or any other, like gold or diamond is relatively better. Silver physical, I would not recommend. Silver ETFs are one of the better ways to invest in silver for the retailers who are viewing your show, and that is something what we've been pushing from quite a bit of time.
Okay, so that's the view on silver. Now, gold seems to have topped out at 1 lakh rupees a tola, and this is something that the market was looking for, has happened. So, probably sell on news is sell on the event is now working very well on gold. Do you see a better price on gold in 2025, or is the bull run over?
No, it's not over. But we are going to see consolidation and short-term downturn momentum in gold. I'm not expecting in a short-term gold to move above $3,500 after performing as one of the best asset class in the entire financial market over the last 6 months. Gold prices in last 1 year have moved up by 40%. So from here, for it to move up sharply, it requires some big triggers which are not there. All the positive news, which generally accounts for the bullish run in gold, are already discounted in the price. So I'm not very bullish on gold in a short to medium term. $3,500 on the CME, 1,03,000 rupees on India seems to be a top for me. At least for the shorter term, I'm expecting gold to again go down to the level of 3,250, $3,200 on COMEX in India, again back to somewhere at 92,000, 92,500. Those will be the level where I would recommend to re-enter. So we are not structurally bearish on gold, but in a shorter term, we are expecting gold has discounted all the positive news, and hence it may not move up, may gradually move lower, and will consolidate at these levels.
Okay. So that takes care of precious metals. Now, how about the ferrous, non-ferrous metals? What looks good to you, copper or aluminium?
So we are very bullish on copper. Copper is one metal where I'm expecting, this year we are seeing a structural deficit taking place in the concentrate of copper. All the big miners in South America are finding very hard to get ores. They have to dig more and more deeper, and that will lead to a major shortage in the concentrate market. Right now, there is a major surplus in the smelting capacity in copper in China. But gradually, we are expecting, because the treatment charges and refining charges are at zero level right now. They are not making any money. So a lot of smelters are expected to close down in times to come. So copper is one metal. I would say it is going to outperform. It is going to do very well. The fundamental seems to be on a very stride. So silver and copper are two metals where we see a shortage is developing on from the supply side, and demand is pretty strong. So these are the two metals. Copper on LME can hit $10,500 in next 3 months, and in 1 year it can test $12,000.
Okay. Now, before we get into the
Okay, it's a very interesting question, and I'm of the view that we are in multipolar is in a better position because I think with every day anti-dumping duty. Same way, every time we see dumping taking place, government will be very proactive. Number one. Number two, India is going up. So India is now aggressively pursuing production of mines and minerals in our own country, and government's focus is very clear. You see the capacity, also demand is moving.
Okay, what we'll do, ladies and gentlemen, is we'll again get Kunal on the link. There seems to be a disturbance in his connection. So we have been in the process of discussing silver and gold, as also copper and aluminium. What is left is the energy basket. He'll come back to us shortly. On silver, he feels any dips need to be purchased. Okay. Kunalji, you're back with us. Your views on metal stocks.
Metal stocks, first I'll come to the ferrous, looks very bullish. Steel stocks looks quite promising to me, considering 7.5% demand growth in the GDP, considering the 7% demand growth in metal. So I was a part of Steel Mint conference organized by Big Mint, and the conclusion and the key takeaway from that conference is India's steel demand is going to grow at least by 7 to 8% going forward. And we are seeing, if you take the export and import combination of that, there is a virtually minimum amount of dumping which is taking place right now, and governments are going to be very proactive. I am expecting steel mills in China will be left with no option but to close their production or reduce their production, because the dumping to India or other Asian countries is not going to be possible. It's a multipolar world. Each and every country is looking after their own production side and their own demand side. So I think it's a great time to own steel stocks, and in that particular thing, sale looks very attracting, very promising. Even for that matter, JSW Steel, Tisco, all of the steels companies looks very promising to me.
Okay. Kunal, we'll also welcome Mr. Narendra Taneja, a very well-known global expert on energy and the Middle East crude basket, and take this discussion forward. Namaste to you, Narendra ji, a very warm welcome. We seem to be headed into a massive escalatory battle between Iran and Iraq. Now, Iran and Israel, and now voices are saying that crude could head towards $90 a barrel. In particular, Citigroup mentioned that if the Straits of Hormuz are closed. Now, how do you read this geopolitical tension, and what is your view on crude oil prices now?
Well, there are basically two scenarios now emerging. Number one is that if the U.S. joins Israel and they attack their nuclear, facilities and stop there, and in return, Iran retaliate, but they don't hit oil and gas assets of the Western countries or the military assets, or they don't actually mine or block Strait of Hormuz. If that does happen, then the oil prices will definitely go up, but they may not, go beyond, let's say, $90 per barrel. The second scenario is that if Iran decides to retaliate, against American attack, then and they block Strait of Hormuz, and at the same time they target American oil and gas assets in that region. They are in Qatar, they are in different other geographies and all that. And then the US in turn also retaliate. Then, of course, it's a massive escalation. In such a situation, if on the one hand, oil and gas assets of Western countries are targeted in the Middle East, at the same time, a Strait of Hormuz is blocked or mined. In that case, oil prices can go up to, who knows, maybe even $150 per barrel. And the American president knows it very well. That's one of the major reasons that he's actually, thinking practically, very, very with tremendous microscope and so on and so forth. He's being advised against it by oil and gas leaders in the United States. But at this stage, we really don't know. We all know that there are two scenarios. But one thing is very clear, that if in frustration, Iran decides to block or mine Strait of Hormuz, that's an extremely bad news. That means over practically no time, 20% of the global oil supply will be disrupted. And at the same time, your demand will remain what it is. Therefore, the prices will go up beyond maybe, who knows, about $150 per barrel if the Strait of Hormuz is mined or blocked. That's the kind of scenario majority of people in the oil world are working on. And that's being conveyed to President Trump very, very powerfully, because American voters hate, expensive oil. They love cheap oil. And American president has been trying to make sure that oil is actually brought down to $60 per barrel. So instead of $60 per barrel, if it goes up to $150 per barrel, you can imagine the political cost for President Trump. That's the reason he's taking long time to take a final call on the issue.
Okay. Mr. Taneja, let's focus on the Indian basket. We are not buying any oil from Iran, and Iran's supply to the global oil market is somewhere like 3%. Be that as it may, how do you see the Indian basket performing? What do you think is the average purchase price that the government of India is paying for crude oil these days?
Well, number one, you see, we may not be buying any oil from Iran. Iran's oil is mainly going to China. I mean, they in total today, they are exporting something like 1.2 million barrels. That's it. So it's not about the size of Iranian oil exports. It's about the effect it can have, the impact it can have on the global oil prices. Wherever there is disruption on the planet, oil prices go up, and it means huge cost for India. Since we roughly import, we are importing roughly 89% of total requirement of oil today. That of course includes crude oil we import, refine, and then export. It includes that. But that said, at the same time, our real challenge is that how, since we are an oil economy, all said and done, so how are we going to manage it? But in terms of oil basket today, as you know, the prices have been going down before the Middle East crisis erupted, and therefore our cost of Indian basket has been in the region of $60 per barrel. In fact, we have been buying oil from Russia almost like at very, very attractive prices, something like in the region of $50 per barrel. So it has been a major, that's why bulk of oil is coming from Russia these days, which we have never done before the Ukraine crisis. But at the same time, it's very attractive so far. And even as we speak today, situation is well under control because Indian basket is still, in the region of about $70 per barrel. I'm talking today. So it's not that bad. Indian economy can deal with it. But anything beyond is going to be troublesome.
Okay. Mr. Taneja, do you think the Israeli war machine will rather attack Iran's natural gas setup instead of its crude oil setup? Because natural gas is something that Iran consumes internally, and they may not have it might not have a disruptive impact as hitting crude oil infrastructure would be.
But if you look at Iran has the second largest gas reserves in the world after Russia. But at the same time, they actually are importing gas from Russia because they are not able to exploit their own resources. And when it comes to the gas export infrastructure of Iran is negligible. So even, for instance, Israel is already attacking, their energy infrastructure. In return, Iran is doing the same. But I don't think it's going to make any difference because Iran, their own domestic consumption is rather limited, and their domestic gas infrastructure, which they use for power generation, for heating water, and also for the transport and so on and so forth. But at the same time, I think it's so so widespread that even if they hit it, it's not really going to make a very substantial difference because they can repair it very fast. So main target is the export infrastructure, which actually, when it comes to natural gas, does not exist. It's not much. When it comes to oil, is mainly going to China. Mainly, China is the main buyer of Iranian oil.
And China is the one that is also possibly suggesting less of escalation, even at the same time shoring up Iranian defenses against Israel. What do you think is China's game plan, Mr. Taneja, in this crisis? Do you think they have the ability to influence what happens in Straits of Hormuz?
Well, this is a very interesting question. When you look at the overall geopolitical scenario landscape in the Middle East today, and think very carefully, calmly, who is the biggest beneficiary? Is China. Because no other country has the kind of capability or capacity to kind of fill in the sense that to take advantage of it. It's not that China has become the United States. China is not the United States. China is much weaker militarily and economically in comparison to the United States. And at the same time, China does not enjoy the kind of goodwill in the Middle East that sometimes the other Western countries have, especially the US, at least the clouds and the power they have. So they will not be able to, but still they have the main they are the main beneficiary. Over last 3 years, we have seen that Iran is kind of emerging as an economic colony of China. China is investing $460 billion in Iran. So far, they have invested more than $70 billion in energy, in ports, and so many other things. So, and at the same time, they are the major supplier of weapons and military equipment to Iran. So, I mean, China is the beneficiary. If, for instance, things go completely out of control in the region, then of course China will have trouble in the sense if Iran gets a new leadership and the leadership is more inclined, to the West. That will be a different landscape altogether. But China does not want the war to escalate. Russia doesn't want that to happen. And at the same time, the US doesn't want Iran to acquire nuclear weapons. Russia doesn't want that. We don't know about China. India certainly does not want Iran to acquire nuclear weapons.
Mr. Taneja, do you think the weekend holds the key to solving this very, very complex geopolitical chess game? Or deep down, do you feel this is getting into an imbroglio which might last a couple of months, God forbid, years?
Well, it's a very complex situation, in the sense that, if the US goes ahead and Israel, they go ahead with their agenda for the regime change in Iran and they get a regime, let's say for the sake of discussion, the former king, Shah Pahlavi's son replaces Ayatollah Khamenei in Iran, we don't know what's going to happen. We don't know whether he's going to be accepted by the people. We don't know, because Iran is not known for a Western form of democracy. There is no tradition of it. There is some kind of democracy there, but it's not the Western form of democracy. So we don't know whether it will go the Iraq way, in the sense that we're going to see kind of crisis, forever, or there will be a different regime because the people want the change, as Israel claims or the US claims. We really don't know the scenario. But as far as India is concerned, what we want to see, that that Iran is mainstream in terms of oil and gas. Iran is mainstream in terms because it's a member of BRICS economically, and at the same time, Iran, drops the plan to have a nuclear bomb. So that's basically what works for us. At the same time, if China emerges as the main beneficiary of the crisis we are witnessing in Iran or over Iran today, that's a very bad news for us. That means China will emerge as the second biggest geopolitical player in the Middle Eastern region, where we have got deep and comprehensive interest. We have 10 million Indians working there. We have $65 coming to $65 billion coming to Indian remittances. We are investing heavily in the Middle East, and they are investing heavily in India, and so on and so forth. So we are talking of building IMEC, India Middle East Economic Corridor, and so on and so forth. So I mean, there's a lot at stake as far as India is concerned. But if there is a full-fledged war, and if Iran is attacked by the US, and then in retaliation, they hit the energy target, they had military target, then we are talking, a kind of war which we don't know, it may last months, it may last years, or it may actually escalate beyond even the Middle Eastern region. It's very difficult to say that. We hope the good sense will prevail, and they will come across the negotiating table, and Iran will agree to drop the nuclear bomb plan. And at the same time, in return, Iran will be mainstreamed, especially economically.
My final question to you, Mr. Taneja, what do you advise the government of India as far as crude oil is concerned? Should they be buying in left, right, and center at this price, or what would be a practical way forward?
Well, this is again a very interesting question. The question is, even if you buy, there's no shortage of oil. Supply side, global oil supply side is very comfortable. In fact, the problem is on the other side, just on the demand side, because the demand is not growing enough. But the thing is that, what do? Even if you buy oil, what do you do with that oil? Where are you going to keep it? We have a storage infrastructure by now, but that is limited. That's for about 12 to 13 days, not more than that. The question is that should we be just buying oil and just keeping it in tankers as some countries do? Iran does that, etc. Iran does it for different reasons, for the supply reason. But so that's not an option. For us, the only option is be ready in case Strait of Hormuz is mined or blocked. Then we will have to basically oil we are buying from Saudi Arabia, we are buying from Kuwait and Abu Dhabi even, and Iraq. That will disappear. So which means we'll have to immediately find oil from other geographies and regions. That may not be so easy. But at the same time, the prices may go up, beyond the kind of level that we are comfortable with. So I think we need to work on both fronts. Make sure that we start sourcing oil from other places for the time, and at the same time, make sure that we are ready to deal with it, especially when it comes to the oil prices, because our economy is extremely sensitive to crude oil prices, and our oil economy, all said and done, all talks of renewables, all talks of ethanol, all talks of green energy, we remain an oil economy.
Absolutely. Absolutely. Mr. Taneja, I'll urge you to stay for a minute and listen to another panelist, Kunal. He's a fabulous tracker of crude oil. He'll give us a sense on how he feels short-term prices are behaving. Kunal, over to you. Where is oil headed? Is it going to boil or is it going to calm down?
So, what I heard of in Mr. Taneja's conversation, I hope that the sanity will prevail. That is what everyone is hoping for. And I also personally believe that right now there is no major, whatever we are seeing in oil is just the fear premium which is building on. If something goes wrong from here, what about if something goes right from here? So I'll give you some of the most prominent examples. In spite of all this heated verbatism and the actual retaliation, gold prices are going down. Okay, in spite of whatever has been happening, we've not seen any major attack on crude oil manufacturing. I'm not talking about refineries. I'm talking about the oil fields. A gas field has been attacked, but no oil fields have been attacked. Okay, so sanity should prevail, and I'm not expecting oil to shoot up until if there is some major escalation. Then it's not predictable, but I believe that the sanity should prevail, and Brent should not exceed below above $85. It should either consolidate marginally higher in a shorter term, but eventually it will go down.
Okay. On that very optimistic note, ladies and gentlemen, we'll call it a day on this panel. Mr. Taneja, as always, it's such a pleasure listening to you, your deep insights into the global oil market. And Kunal, as always, it's such a pleasure listening to your view on prices. Thank you so much, both gentlemen. Let's call it a day here, and let's hope that there is a sensible solution coming over the weekend as far as this West Asian military crisis is concerned. Thank you so much for watching.